Have you ever looked at the financial markets and just wondered, how in the world do professional traders make sense of all that chaos? Well, I can tell you it's not about crystal balls, and it's definitely not about wild guesses. It's all about a process. A disciplined, repeatable process that really separates the pros from the rest. So how do they do it? Come on, let's break down their journey from raw data all the way to the final decision.
But first, we have to start with a pretty sobering number. Reports show that a staggering 90% of retail traders, so everyday people, end up losing money. That's almost everybody, which, leads to a pretty obvious question.
So what is it? What's the secret sauce for that tiny 10% that actually succeeds? Well, it's not one single trick. It's a commitment, a dedication to a structured approach. And that's exactly what we're going to unpack right now.
Before they even think about risking a single penny, it all starts right here, with a mindset. It's a set of guiding principles that become the foundation for every single thing that follows. Now, this isn't the most exciting part of trading, but honestly, it's probably the most important. I want you to think of a professional trader less like a gambler and more like a sniper. Most of their time is spent just waiting, observing, watching, lining up that perfect shot. They don't just start firing randomly. The best traders I know spend 90% of their time waiting and maybe 10% actually executing. Chasing trades just because you're bored, that's a recipe for disaster. And this really gets to the heart of it. Your decisions have to come from your head, from a plan, not from your gut. Every single trade, win or lose, needs a why that's rooted in data. Pros are meticulous record keepers. They journal everything so they can learn from what worked and, even more importantly, what didn't. It's how you replace guesswork with an actual strategy. Oh man, this quote is everything. It gets to the absolute core of a trader's real job. See, it's not about trying to make $1 million on one home run trade. It's about surviving so you can trade again tomorrow. Your number one priority, always, is protecting your capital. Because without it, you're out of the game. Simple as that.
Okay, so with that mindset locked in, how does a potential trade even get on the radar? Let's take a look at how a pro goes from getting that very first signal to building a full-blown strategy.
It all starts with something like this, a trade alert. Think of it like a scout tapping you on the shoulder and saying, hey, you might want to look over here. It's not an order. It's not telling you to buy or sell. It's just a catalyst, a little trigger that says, hey, this stock is doing something interesting, and it might be worth a closer look. That's all.
And what's really cool is how technology makes this happen. What you're looking at here is basically an automated scanner. It's software that is constantly sifting through thousands and thousands of stocks, looking for very specific patterns or criteria that the trader has set up. This is how they filter the noise of the entire market down to a small, manageable watch list.
So once that alert pops up, it kicks off this very simple, very repeatable roadmap. You get the alert, you do your analysis, you look at the charts, and then, and only then, do you execute. What's the most important thing to see here? Actually placing the trade is the very last thing on the list, not the first.
So how do you actually structure that analysis? Well, a lot of traders just adapt a classic business tool you've probably heard of, the SWOT analysis. They're literally just asking themselves, what are the strengths here? Like, is the stock in a strong uptrend? What are the weaknesses? Maybe it's approaching a price where it has struggled before. What's the opportunity? Is there good news coming? And crucially, what are the threats? Is there a big market event that could just blow this whole idea up?
Okay, so the research is done, the analysis is complete. Now it's time to move into the execution phase. This is where the rubber meets the road and where all that homework turns into a live trade. But wait, before a single button gets pushed, the most important calculation of the whole process happens right here. This is the golden rule of risk management. By only risking a tiny fraction of your total account on any one idea, you guarantee that no single bad trade can ever knock you out of the game. So let's make this really concrete. Check out this calculator. Let's say your account is $20,000 and you stick to a 2% risk rule. So what's the absolute most you can lose on this one trade? $400. That's it. That one number, $400, now becomes your guiding star. It dictates every single thing that happens next. And here's where the magic happens. That $400 of risk isn't just some abstract number. It translates directly into a concrete plan right on the price chart. It defines your entry price, your profit target, and most critically, your stop loss.
That's the exact point where you get out if you're wrong. The math dictates the strategy, not your feelings.
Let's be crystal clear about the stop loss. It's your eject button. It is a preset order that automatically gets you out of a losing trade at the price you decided on before you ever got in. This is the tool that enforces discipline when your emotions are screaming at you to just hold on a little bit longer. It's non-negotiable.
Okay, so we have this process. It's built on discipline and really strict risk management. But what happens when you try to apply these same principles to, well, the wild west of the financial markets, the most volatile stuff out there?
Well, the whole game changes. Unlike traditional stocks that are usually driven by things like business performance and earnings, assets like crypto or small biotech stocks can be incredibly unpredictable. They're often driven by pure speculation, news, or social media hype. This leads to these extreme, violent price swings that demand an even higher level of caution. And that's why your mindset has to shift completely. I mean, this quote says it all, right? For these super speculative assets, you're not investing in the classic sense. You are allocating money that you have to be 100% prepared to lose entirely. Think of it less like a retirement plan and more like a lottery ticket. So after all of this, from the mindset to the analysis to the execution, what is the single most important thing to take away? It's this. The process, the data, the charts, it all serves one master, and that master is risk management. For any trader who wants to survive and thrive long-term, it's the beginning, it's the middle, and it is the end of the story.